Welcome back to another exciting trip around the Crypto Canaverse. The Crypto Canaverse is a founder's trusted resource for investors, advisors, and partnerships. In this episode, we sit down with three visionary fund founders to explore the fascinating world of Web3 investments, from cutting edge projects to strategic partnerships. We'll touch on the intricacies of fund structures, investor relations, and personal philosophies. Get ready for an engaging discussion filled with innovation, inspiration, and insider knowledge that's not to be missed. But before we get started, Alan is going to present our Bible verse for today.
Thank you, everyone, for joining Crypto Canaverse, another week of Crypto Canaverse. Today's Bible verse was chosen by Jack, so I'll open up to you to see what your thoughts are. It comes from the book of Proverbs, 31:16-18. And it reads, "She considers a field and buys it out of her earning. She plants a vineyard. She sets about her work vigorously. Her arms are strong for her task. She sees that her trading is profitable, and her lamp does not go out at night." Jack, you chose this verse, and I wanted to open up to you. What is your insight and what are your thoughts, and why did you choose this verse?
Yeah, so this verse is describing what a virtuous woman, but I think what it's the virtue extends beyond just women, obviously. I really like that it describes your financial responsibility to your family, and for me, the main reason why I want to make a bunch of money is so that I can use it to provide the best possible life, both for my existing family and for my future family, right? So I think that it is, this verse definitely highlights for me that it is okay to pursue a career. Like, not everyone needs to be a Franciscan monk and be a Christian. And by the way, I was very pleasantly surprised to find out that this podcast has a Christian angle. I feel like that's something that is like almost like very underserved in tech. But anyway, so as long as your motivations for obtaining that money are virtuous, then the pursuit of money can be virtuous, and in fact is a requirement for a virtuous member of a family, which I really like.
I love that. Alan, what do you think?
I think the same way is the importance of building wealth for your family, your next generation, and doing it in a virtuous way. Exactly what the verse says. Is there anyone else out in the audience like to share?
Not at this time. Thank you guys so much. Thank you, Jack, for sending in that Bible verse. We really appreciate it. We appreciate the kind words about us, speaking out about, our beliefs. We welcome all beliefs on the show. We lead with love and light, and there's really not a lot of people out there that really have I don't know what's the good word, the courage to intertwine them. And so it's been a very long road for Alan and I to get where we are. But most people understand and appreciate what we're trying to do, regardless of their background. So we greatly appreciate that. Thank you. Today's announcements. The Crypto Canaverse Show is putting together an international pitch contest for females building projects in blockchain, Web3, and DeFi. It's going to be in February 2024. If you'd like to be a judge or a sponsor, please reach out to Crystal Wampler or Alan Lau, or reach out to us at info@cryptocanaverse.com. We have our upcoming show. Join us on August 8th. We will be live at Woody Harrelson's Cannabis Cafe and Dispensary called The Woods. We will be covering the launch of High Magazine. High Magazine is a cannabis, botanical, sexy couture vibe. They have very little photos of cannabis in it. And the editor-in-chief has written for Maxim, every major magazine that you could possibly think of. They have signed They're the first cannabis magazine to sign Porsche, which is super fun and exciting. And the Porsche team will be at the event. Hopefully, I will be interviewing them. And they are also bringing their hemp and flaxseed Porsche car, which is super cool. High Magazine has signed many other people, including, Wiz Khalifa, Pax, so many more. Please join us August 8th. Tune in. I would like to welcome our guests today. We have our guest co-host, Mr. Sammy Rusani, partner at Type 3 Capital. Welcome, Sammy. Thank you for being here.
Thank you so much for having me.
We also have our company highlight today, which is Jeff Embry, partner at Globe 3 Capital. Welcome, Jeff. You're on mute.
Thanks for having me again, Crystal and Ellen.
You are most welcome. And our speaker highlight today is Jack Ratkovich, general partner and at Perspective VC. Welcome, Jack.
Hey guys, thanks for having me.
Thank you all for being here. Let's start with, who would like to introduce themselves first? Do we have a volunteer? No. Let's have Jeff.
Sure. I'll go first just real quick. Managing partner of a liquid token crypto hedge fund that was launched just over 2 years ago in July of 2022. So we were a bit early to the bottom of the bear market, but that was the plan. You want to be early, you don't want to be late. We specialize in small and micro cap tokens with the intent of identifying them in the 20 million to 250 million range and growing long term with them. We love the liquidity of the tokens that allow us to unwind if we make any mistakes or the companies we invest in make any mistakes along the way. And couldn't be in a better space. Going to be an exciting day. I think crypto is coming into a maturity phase that we all want to see. And today might be a nice backing from the government political stage to say we support it and let's take it to the next level. So anyway, exciting times always, and enjoying everything about it.
Thank you so much. Sam, welcome. Please introduce yourself. Oh, Jeff, one more thing. Where are you calling from?
Yes, Northern California, Bay Area. A little hot out here these days, but it's cooling down soon. So East Bay.
Thank you.
Awesome. Thank you for having me. Sam Rusani calling in from vacation on Sicily in the scorching heat. It's amazing here, though. I highly recommend it. General partner of Type 3 Capital. I've been in crypto and digital assets since 2012. I run a family office, a VC fund, an impact fund, and a hedge fund together with Chris, who's also listening in here on the call. We're not real world assets exclusive, but we focus a lot on real world assets and tokenization of real world assets. As we see, that's a very important part of Web3 moving forward. We are specializing more so in large natural resources, commodities, and large real estate projects. And for that, because the projects are so large, we also help bridge traditional finance, such as private equity, family offices, ultra high net worth individuals, etc., and help them kind of dip their feet into Web3 with these tokenized assets.
Very interesting. Thank you for introducing yourself. Jack, how's it going?
Hey guys, yeah, I'm Jack. I'm managing partner at Perspective VC, early stage, mostly generalist venture firm with a focus on areas like RWA, payments, and honestly, like any project that uses blockchain technology to change the paradigm in like a real business, right? As opposed to focusing primarily on like deep tech or something like that, right? So I definitely identify with Sam as not being RWA specific, but definitely having a strong focus there.
Nice. And then our other company highlight is James McDowell. He's the founding partner at Arcanum Capital. Did I pronounce that, James, right?
Perfect. Yes.
Wonderful, wonderful. Thank you, James, for being here. Would you mind taking a moment to introduce yourself?
Sure, I'm James McDowell, founding partner at Arcanum Capital. We have been investing in the space since 2013 as individuals, but we founded Arcanum in 2020. We raised a small fund of $12 million, invested that into 44 companies, deployed that pretty quickly. It only took us about 6 months to deploy that. They're all enduring now, doing very well, and very excited about this upcoming bull cycle. And we're concurrently raising our second fund in partnership with Luganodes. Luganodes are probably the world's fastest growing staking provider. They've got about $3 billion worth of assets staked with them. And they're one of the top validators on many of the top proof of stake networks, such as Polygon, Sui, Solana, Tron, Polkadot, etc. So that will just be another string to our bow, really, when it comes to value add. We're very passionate about adding value, and Luganodes will just put that cherry on top with technical value add. So being able to participate in testnets and being able to run, validator nodes, decentralized sequences, and things like that.
Wonderful. Thank you so much for joining us today. We appreciate you being here. You know, this episode was inspired by Jack. Jack posted on Twitter, he's like, I always have people coming to me and say, invest in this, invest in that. But they never ask, what should we be creating, or how should we, what should we be building, et cetera. And so I'm like, that's interesting. I think it would be really fun to find out what fund founders and managers are thinking. So with that, let's go ahead and throw the question out there to all the fund managers. What Web3 projects would you like to see created, and why?
So I think since we're going off of a tweet that I kind of want to step in here and kind of specify like specifically what I mean, then also what I think founders should be building, I guess. But so I go to a lot of crypto conferences, as I assume most VCs do, on probably even more so than founders, right? And obviously, as soon as a founder finds out that I'm a VC, they want to immediately start pitching me whatever their idea is, no matter what stage it's at, even if it's just like, a twinkle in their eye, right? And what I find is that a lot of founders have ideas that can be pretty good, but they don't really play to their strengths. Like, you'll have someone that comes out of an industry that has nothing to do with private credit and say that they want to revolutionize private credit with crypto. The problem with that is if you're going to do anything related to private credit, you better have a very, very, very solid understanding of risk underwriting. So whether that comes from like, a decade in traditional finance working specifically on private credit, or being like a data scientist in like a traditional fintech or something like that, right? So I would say that my number one piece of feedback to founders is play to your strengths. And if you do have a really good idea that you think could be very revolutionary, at the very least, you need to find a co-founder that has that particular skill set.
Wonderful. And then are there any kind of projects that you would like to see created that aren't being created?
As of right now, I'm kind of trying to figure out. I feel like every few months I go through this period where I try to rebuild my thesis, and I'm kind of in the middle of that process right now. For the last few months, I've been very RWA heavy. So I've been looking at projects like Plume, for example, right? If you're not familiar with Plume, I highly recommend getting familiar with Plume if you're at all interested in RWA, because I think that's going to be the biggest thing in RWA. So as of right now, I'm trying to figure out where I think blockchain could be the most beneficial in the future for things that aren't currently being built. I am seeing a lot of, like I mentioned earlier, private credit protocols. I firmly believe that private credit is going to be the next big thing in RWA. It's like in the last huge thing in RWA that's still like the biggest thing in RWA is treasury bills. And treasury bills are obviously very, very low APY. They were really good yields during a bear market, but not really good yields relative to DeFi now. And once rates come down, that's going to get worse. So I see private credit as kind of the next step there. It's kind of using the things that T-bill products tested, and while moving slightly up the risk curve. So that is an area that I'm interested in taking a look at, as long as the team makes sense. And yeah, what else? I don't know. I'm kind of waiting for like really good consumer apps. I really like application layer stuff. There's already so much infrastructure. I don't really want to see new like another rehash of an old DeFi primitive, because those have been done so many times before. So yeah, something on the application layer that really makes good use of blockchain technology. As another example, there's a project called Kiva AI that I'm very bullish on. So I don't want to go into the full depth on what data labeling is in the AI economy, because I could be here all day talking about that. But the guy who basically built out the machine for the largest Web2 data labeling company, which is Scale AI, is building a CoinFund and Hashkeep capital backed startup for Web3 data labeling that vastly improves the scalability and payment infrastructure for data labeling, which again is a very key but very niche part of the AI ML economy. So yeah, I guess things that actually have real use cases and are not exceptionally abstract in their value.
Sammy, I noticed that you're over there shaking your head. I'm sure you have comments.
No, I'm nodding my head. I'm agreeing with
Yes.
everything he's saying. Oh, Jack, I mean, you hit the hammer on the nail there. I mean, it's private credit on chain, absolutely. I mean, that's absolutely amazing. I found your story funny too, that someone wants to revolutionize something. I've never even worked a minute in that area. That's of course mostly a problem. I do think, it's funny because if you ask me, what do you wish to be built in Web3? I think there's so many cool things going on in Web3. As on the investor side of things, I've learned to kind of take a step back, and instead of chasing these ultra high tech things that people never thought about, and they're big visions, and in theory they sound fantastic, but in reality we're just not there yet. And there are lots of those. I think that's for another type of investor than me. Like, I didn't invest in fusion technology 10 years ago, or quantum computing 15 years ago, because it was just way too early for me. And I don't know much about it, but now it's opened up, and I think it's the same. I've learned to take a step back, and totally agree with Jack that when I see real world applications and use cases, I get excited. I get excited because it's something that, I think we're all in Web3 because we think it's cool to kind of disrupt a little bit, stir the pot a little bit, rebels with a cause, or whatever we want to call it. But at the same time, well, we also want to change the world, etc., with cool new technology. But at the same time, as investors and VCs or hedge fund managers, or if anyone is managing other people's money, we also have responsibilities to deliver, yields and returns to those people without taking too much of a silly risk, so to speak. So I've learned to not sit and wish for certain things to be built. There are many super smart founders out there, and I'm just excited when we get a deck on the table, or an introduction of something that's where we're like, okay, wow, this really has a good application. And I do think, yeah, we've been really RWA focused lately, but obviously we've made investments in infrastructure, we made investments in DeFi, we've made investments in even gaming again, right? That was last cycle, but so we're not completely just exclusive to one thing, but I do think we're looking for much more real world use case now than any of the other cycles, so to speak.
If I could just add to that, like I fully agree with everything that Sam just said. I love the grounded investment approach. Like you don't need a crazy like revolutionary idea to make a lot of money, right? You just need something like if you can integrate blockchain technology to improve a Web2 process by 10x, like that's good enough, right? And in fact, that's probably more likely to make money. The meta so far for VC investments over the last few years, like so the last cycle, VCs invested very heavily into DeFi protocols. There hasn't been that many interesting new primitives in DeFi. And also, you come across a difficulty of bringing net new liquidity into the space because people who are not already in DeFi, very few of them are going to actually enter into the DeFi space. Which is why I really like Web 2.5 use cases where people who have never touched DeFi can still, interact with DeFi. I really like that. And the other part of the meta has been infrastructure bets because, the fat protocol thesis, there's the idea that basically like value from things built on top of a protocol will accrue to the infrastructure of that protocol. That's great, but now the market is so flooded with infrastructure. There's so many L1s, there's so many L2s. And if we never build out applications on top of that infrastructure, like what the heck are we even building that infrastructure for? You know what I mean?
Yeah.
Yeah, I'd like to jump in and say decentralized social media. If we talk about Web3 idealism and look at what needs to be disrupted and look at these data oligarchs, I think decentralized social media is a big one. We actually have a portfolio company doing it, which I don't see has any viable competitors. It's called Verse, and they have about 4 million downloads now. They've hit #1 spot on many app stores, including UAE. And metamorphic profiles, social graphs on chain, and kind of a Web 2.5 angle where normal people can just download this thing and it feels and looks like TikTok. It's growing at the same rate that TikTok did in the beginning, but then Web3 element on chain, they just launched on mainnet on Base today actually. So check that out. And they are actually raising capital. So if anyone's interested, can DM me or email us Arcanum Capital, and we're more than happy to make an intro.
Jeff, did you have any comments on that?
Yeah, I agree with James. One space we're looking heavily at and invested in is the social aspect of it, the metaverse. And we think, James, to your point, one of the most critical aspects of that is the account abstraction, right? Is pulling off of the blockchain, I guess would be a good way to say it, and the data ownership of all of your assets. Very similar to a Facebook or a LinkedIn where you have your profile up, but all of your assets, all of your links, all of your passwords, etc., for all of the Web 2 connections are all based on that. So instantaneously, you don't have to remember passwords. You can just hit a link to a Web 2. It identifies your profile through the blockchain, and you're abstracted off of that blockchain. And that's been a real hindrance. They didn't think that through in the original iteration of, when Ethereum was being built, et cetera, and now they're coming around back to it. So, yeah, we see that as optimal, a great use case, social and digital ownership, and people being able to identify each other, all of us, either directly or through, anonymous pictures, like, anything else, to transfer assets, hold assets, utilize assets, and instead of these long chains that, nobody can identify at all.
Thank you. Can you guys elaborate a little bit and tell our audience why it's so important that we do move Web 2 over to Web 3, or why decentralized social media networks are important?
Well, there's a great book. I'm sure most of the people on this call have read it, actually. Read, Write, Own, by, what's his
Chris
name
Dixon.
again? Chris Dixon, that's it. Is he still a partner at A16Z or former? Yeah.
Yep.
that sums it up. It really does. And we're entering the next iteration of the internet. And like I said at the start, you've got these these oligarchs that basically own and control everyone's data. You can have a content creator that's been creating content and serving a community for a decade, and all of a sudden they say a bad word and they can just pull the plug and you're gone, and so is your entire decade's work and your entire community. All your followers, they're all gone because the social graph is on their servers and you have no control whatsoever. So read, write, own is the book, and it's the emphasis on the own. We should be able to own our own data. Most of the time we don't even get paid, these companies using our data. They simply sell it to advertisers, and we are the product of these platforms, and it's completely unfair. So Web3 will fix all that. But like Jack said, we have all this infrastructure, but where are the applications? I wish there were 50 decentralized social media applications all fighting for millions of users, but we're not quite there yet. So it will come. It's just going to take time.
Thank you so much for elaborating on that. I can't agree with you more. I can remember back in 2018 when we were launching cannabis companies and I was helping them launch, and they would build up their social media to 100,000 followers, and they would say one wrong word and they'd lose their account. They'd be locked out, their community gone instantaneously. And so, I love the fact that decentralization exists now, and I hope we can get all the Web 2 people moved over, even if they are moved over kicking and screaming. With that, which some will be, of course.
It's just reaching that critical mass, right? Social media is such a Goliath thing to attempt, because these entrepreneurs, they get a bit down the line and think, are we really taking on Facebook, Meta? It's not just Facebook now, it's Instagram too. People run their whole lives on these platforms. They run their businesses on these platforms, and they have billions of users. And to reach that critical mass is such a daunting prospect that the vast majority, hell of it. Yeah, you need to raise a lot of money. I was on a call with Verse recently with an investor in Korea, and he said, yeah, I believe in you, but you're going to need a lot of money. So yeah, that is a good point.
Yeah, I'm actually, James, I'm actually curious, what do you think it would take for a decentralized social media project to reach like critical mass and to start obtaining mainstream adoption? Because I feel like even like Warpcaster, right? Like I feel like the users on there are very niche. I haven't really looked at the daily active users recently, but just gauging based on, so this is all assumption. This is not based on data, but just gauging based on the links that people send me, which are still Twitter and almost never Farcast or Warpcaster. I feel like I would imagine that the hype is starting to die down and users are starting to dwindle there a little bit. So yeah, what do you think it would take to create a decentralized social media product that could actually compete with the big boys?
Yeah, I think it has to be Web 2 enough. It has to be familiar enough to the average user. I think you're fighting an uphill battle if you start with Web 3 and think, right, we'll get all the crypto guys on board, and then you just have this community of people that are arguably not like the mainstream. And it, like you say, it becomes very niche, and it becomes the hype can die off a bit. I think if it's Web 2 enough, and it has a unique feature or a unique hook. So we talk about Verse again. I don't want to shill too much, but it's very familiar. So anyone will download it and they'll be like, oh, I know how this works. I've used TikTok, I've used Instagram. Very, very similar, but unique features that make them go back. So for example, there is text to filter using generative AI. So rather than flicking through filters, you can just type what you want and the AI will generate it. So people love just going on. It's like, oh, TikTok has just a few filters, but I can have whatever a filter I want. Just little things like this, just to keep them going back. I think that can help. And just what I said about familiarity, you can't make it too different or too Web3 native to start with, because that's just not the way to go.
Right.
I think that's a
I think
healthy
it's,
approach. Oh, go ahead.
I
Sorry.
think it starts with the profile. Again, that account abstraction, that pull back off of Web3 to make it look like Web2, to where you build a profile to where, I mean, if you think about wallets today, think about any wallet you own. Are you going to own that wallet or utilize it in 5, 7, 10, 15 years, right? But are you going to utilize LinkedIn on some level in 5, 7, 10 years? Facebook, probably yes to all of those. So to us, the transition is pull off the blockchain, that wallet experience that, really only natives get at this point, and is just absolutely obtuse, to creating the profile. And then, as you say, James, you've got these D apps coming in, and maybe Verse is one of them, that then plugs into that profile. So I've got a follower program. I have a TikTok program, a YouTube, if you will. And now all these D apps are competing. Maybe there's 10 different types of TikTok programs to plug into that universal profile, and I use it. So anyway, we think we've identified that next iteration. What basically Ethereum is trying to do with, I think it's EIP 4337. There's just too many, 5,000 to 7,000 layers on Ethereum to be able to properly plug in and pull that account abstraction out to go ahead and build off of it and build all these amazing programs that we all want to see. So that's kind of our understanding and where we're diving deep into it to invest.
Go ahead, Sam, and then Russ.
Yeah, I think obviously we could make this a very, very long discussion. I completely hear what you're saying. I feel like coming in as more on the critical side of this, we've seen a lot of social media products. We even invested in a bunch of them back in the day, so to speak. I keep hearing the same pitch from 8 years ago is what I'm feeling. And my fear, although I see that it inevitably will get there, I think it's important that, like you said, we need to remove the Web3 element completely. People don't care about Web3. People care about good content. We saw this in gaming in the last cycle, right? Everybody was like, oh, everybody gets to own their own stuff. It's decentralized. It's amazing. In theory, it sounds great. Did it work? Not at all, because gamers, in the end, didn't care about owning their own stuff at all. They don't care if it's on Steam or if it's in an app, and they don't really own, they can't move between different games, etc. They just want a good game, right? That was what happened. That's why a lot of gaming projects failed last cycle. Or we saw these kind of like social gaming assets come up in developing countries where they could make money, but that's also not, it went up and down, as we saw on that as well. But I really think that, are we there yet? I'm not really sure, because one, it's massively expensive to acquire the amount of users that you need to even take on any of the giants. Two, Web3 founders are still thinking Web3, right? We need to remove that. Nobody thinks about TCP/IP. Nobody thinks about 5G protocols. Nobody thinks about it. It's just good content. The right people are there. I got my crew on there. I can share my stuff on there. I can create a business. I can be an influencer, share with my friends, whatever the purpose is. Because we're talking about creating an all-encompassing, massively wide, broad demographical platform, right? All these niche platforms, some of them are doing pretty well because they have these niche people and thus they talk about their things. But I'm a little bit skeptical to if we're there yet. Would love to hear your thoughts on it. I just think it's a little bit in the future still.
I sort of have a contradictory point, and this is something I've been thinking about for a long time. And when I say long time, it was back when I used MySpace, and then going back, and it's funny because I discovered my wife on MySpace. Not originally, I posted a bulletin, and if anyone remembers how MySpace worked, you post a bulletin, And I was like, does anyone know any girls that go to this church? Some guy messaged me. I got some on my top 8. It was a youth pastor. Hindsight, it's kind of weird that was the case, but it's nor here nor there. But anyway, so I have like this history I've developed on MySpace, and it's special to me. It's my data. And then so flash forward however many years, I'm like, oh, I want to jump back over there. And I realize all my data is gone. And that hit so like, I mean, I even worked for Stacks for a little while because I loved their encrypted data and how you could unplug your data and plug it into other apps. And I thought that was fantastic. I was with them for over a year because I was really excited about what they were doing. But I believe that the mainstream has not been burnt enough to really create this catalytic moment of adoption. I do believe it will happen. And then Web 2 models will have to be reoriented towards Web 3. I don't think we need to build for Web 2. I think we need to be ready for enough of these catalytic moments to really push the adoption over into Web 3, because at some point they will have to shift over. And I just don't think it's really I don't think a lot of these large corporations can really afford the Web3 mindset, because their financial, how they make money doesn't directly work with the new business models that are born out of Web3. And so I think there's just, it's complex. It's definitely a complex thing. I love the social media thing. I agree with James saying we need some novelty in there to create some stickiness. I mean, Web3 gives us a lot of tooling to make some pretty incredible stuff. I think we're still discovering that as we go along. I happen to think that it's social media, and then you add some immersion on top of that. You have the ownership, but you create an environment that's like Discord and TikTok combined, where you're getting people to the live social interactive experiences that they want to be a part of based on what's in their wallet and all the things that they've done in the past, because you have those data points from the ledger that's, everyone can access. But yeah, it's just really synthesizing it in a way that people can understand, because you can say a lot of stuff that actually is true, but if you can't communicate it, it means nothing. And so I don't know. I think it's just a kind of a sleeping giant, and then we're just building these sleeping giants. And then I think a lot of us who have been in this, world for long enough, we just know it's a matter of time. It's not if, it's when. And so we just keep building until that time comes.
Russ, oh, sorry, go ahead.
I was going to say, so caveat before I say this, I have not spent that much time with decentralized social media. So this could be completely off base. So James, let me know if this is absolutely incorrect. But, I feel like if you look back at disruptive social media projects, they've just been things that have made social media progressively more addictive, right? Like Facebook started out with the likes, you get a little bit of a dopamine rush from someone like approving of what you're doing, right? And then Instagram, you're getting so much novelty by scrolling through all the different images on your feed. And then TikTok obviously completely changed the game to the point where everybody's copying them now with very, very short form reels. So you're getting like very, very short, a constant novelty, just maximizing your dopamine inflow. Which is why some people end up just like scrolling through TikTok or Instagram Reels for hours at a time. So I wonder if something that crypto could provide, if there is something that crypto could provide that could make social media even more addictive than it is now. And I don't know what that would look like. Like, maybe
Gambling.
as a, yeah, exactly. I was about to say that I was about to say, as an absolute degenerate crypto day trader myself, who is done way too much in the meme coin sphere, which is absolutely just pure gambling. I wonder if integrating some kind of like crypto native, like could be like speculative markets on all kinds of nonsense, like maybe a speculative market on which songs are going to be popular after they come out, right? Or maybe it's just meme coins. Maybe figuring out a way to capitalize on the attention economy in the same way that meme coins have, and integrating that into social media. Like maybe that is the 0 to 1 for Web3 social media, and making it like more popular to the public.
I like those ideas.
Yeah, I like the thoughts.
Amanda, you have a question.
Yeah, I like to think of myself during these topics as like the common person, like the person who has watching is like, I don't know what they're talking about too much, but it's really interesting. So this might be a dumb question, but from what I'm getting is you're all agreeing that you're all looking for real world applications. Is it because you want more simplicity? You want it to be more user friendly? And is there no application out there that's really hitting the nail on the head? I heard you mention Versus as an example.
I mean, if we're being completely honest, like for normal people, Web3 is not useful at all, or like at least historically has not been, right? Obviously, it's useful for me as an investor, as a trader, as a yield farmer. But the learning curve to get into DeFi is it's pretty vast, right? Like it's not easy for a normal person to get into DeFi. My dad's never going to get into DeFi, right? And it really, crypto has primarily been this big casino. And I do see there are use cases for crypto that are actually making it useful now, right? Like I mentioned Kiva earlier, there's some great payments projects. That's why I like RWA, because it's actually crypto actually can revolutionize the traditional financial system. Even like people point to the liquidity aspect of crypto. Sure, that's cool, but I mean, it's even things like not having to create bespoke legal contracts for like cross-border invoice factoring, right? Or like anything like that, right? Like because then now you're cutting down so much on lawyer fees. Sorry, Clayton. Now you're cutting down so much on lawyer fees that it actually does create a massive benefit. So I think this is also a reason why we need to make crypto easier and more accessible so that people can use the financial aspects of it, of course, obviously. But even things like, dude, if I have like a credit card that, or like a debit card that has some kind of like yield bearing stable coin as the like in my like quote unquote savings or my wallet or custody or whatever, so that I'm accruing a yield that's better than like the 0.01%, 0.001% interest that I'm getting at a bank, right? Then I'm just passively creating income. And every time I swipe my credit card, or my debit card, just convert that yield bearing stablecoin into cash, like sell it at that exact moment. Like that's useful for everyday people, you know? So I think what we're getting at is we want useful applications of blockchain technology.
Any other comments before we move on? No? Well, I just want to comment that I think it's going to take, someone like Facebook or Instagram, one of the big players, to openly adopt Web3 in some form. I think it would be super cool, be a big move. I know maybe it's Facebook 0.3 or something like that. I don't know.
It'll be Twitter.
Yeah, right. Very fascinating. Let's move on to investment fund and structure. I'm curious, where is everyone setting up their structures at? Luxembourg, Cayman, Virgin Islands, Delaware, and why? Let's start with James.
Cool. So we took a long time looking at this stuff. We wanted to be institutional grade. We want to be set up for when the likes of the pension funds want to invest into Web3 and blockchain and crypto. So we looked at Cayman, we looked at BVI, we looked at Switzerland, we looked all over the world. And we settled on Bermuda, interestingly enough. A few reasons for that. We have a traditional finance veteran who is one of our directors, and he is based there. We have a close relationship now with the Premier of Bermuda, who is pro digital assets, pro crypto, likes the technology, and wants to help foster, move things forward and attract funds to that jurisdiction. The regulators have been great. They are firm, but you can talk to them, and they offer clarity and transparency. And it's been a breath of fresh air, really. And they're not too slow either. Other reasons that the director I mentioned, he has a fund platform there. And so he hosts many funds, and we benefit from things like economies of scale on custody or directors so the stars just aligned on Bermuda. It's a very good jurisdiction in terms of reputation. It's the insurance capital of the world, so lots of big insurance companies there. Digital asset friendly, as I've already said. Doesn't really have the same microscope on it like Cayman and Panama. These countries. There's they are sort of looked at more. And Bermuda doesn't really have that sort of shady reputation. There isn't much that goes on in Bermuda. And so it's been great.
Thank you. Do we have any other comments on Bermuda? Any more information? No? Let's move over to Sam. Sam, what about you?
Awesome. That sounds really interesting, James. I never thought of Bermuda. So
If I can just add to it as well, I believe Coinbase have just moved there. There's a couple of other big names, and they have just launched something called a DABA license, which is the digital asset. I don't know, something digital asset business something. But basically, if you're dealing with digital assets, you're managing digital assets, there is a special license that you can apply for with the regulators. So it's
if they were flying
forward
under
thinking.
Oh, sorry. Go ahead. I was just going to say if Bermuda was flying under the radar before, well, adding Coinbase, they might not be flying under the radar for too much longer. But thank you so much for sharing that. Sam, what are your thoughts?
We also performed, I would say, almost a 12-month research project into how to set up a very global structure. And just like James mentioned, we would like, when we thought about setting this up, we wanted also to be a 100% regulated, pension fund friendly place to put money into, so to speak. And also what we want to work with, we don't want any regulators breathing down our necks, etc. We don't want to do cowboy stuff because of what we do, helping traditional finance. So with all these family offices and private equity, etc. coming in. We have a very global structure. Virgin Islands is where it all started. And now it's expanded into different licenses. We have the corporate finance licenses out of Mauritius, mostly because we're looking a lot at BRICS and the African continent for natural resources, etc. We have an EMI license out of Lithuania, so we can convert back and forth on our own if we need to. And we are setting up actually a structure on the Cayman Islands for both hedge fund and debt and insurance, because we have some projects that we're structuring out of there. So it gets a little complicated with the international structures. But one big thing we did find, and I have to thank Clayton, who's on this call, of course, because he's the master of all structuring here, is that the Cayman offers the ownerless foundations, which of course can help with, first of all, legal protection, creating walls, and then also very tax beneficial for us EU citizens, for sure. So that's how we're set up.
Thank you, Jeff.
Yeah, we took the exact opposite approach as James and Sam. We were in a hurry to launch, knowing that the equity bear market was collapsing. So was the crypto bear market in mid-2022. And we also were doing it to bring in a lot of friends and family that had approached both myself and my chief investment officer saying, hey, I've got extra liquidity. I want in this amazing space. I know it's the future. I don't have a clue how to even attack it. Anything, can I just give you money? And so we had money, nice chunk lined up before we even mentioned the word hedge fund. So we kept it US, we kept it small. Our fund accepts investors at $100,000 is the minimum. And we knew if we could launch at or near a bottom, crush performance, get our infrastructure set up correctly with fund administrators, lawyers, etc. And again, nail performance, in a couple of years we could expand and we could go the route of James and Sam and start, and we'd have more contacts and deeper into Web3 and start actually the bottom up, moving from friends, family, that next circle, the next circle, into the family offices, the fund of funds who we've already started to speak with, which has been nice, and eventually the institution. So we're looking to launch a second fund probably mid 2025, and just getting the first fund exactly where we want it. And it's a lot of fun.
Thank you, Jack.
Yeah, I'm probably not a good person to ask about this, but so I mean, we talked with several lawyers before making a call on a lawyer, and we just went with the recommendation of the lawyer who seemed like he knew what he was talking about the most. So we're going with BVI.
Nice. Thank you for sharing that. Why are you going with BVI?
Frankly, because that's just what our lawyer told us was the best place to do this. And our lawyer specializes in fund formation, and he does a ton of these. So we're like, well, and also like, we have a lot of friends whose funds are set up in BVI, and so we went with the consensus and just trusted in the lawyer. Because frankly, like, I could expend tons of time doing research on like, where the optimal setup location is, but I think what we're doing is fairly straightforward, and I think that my lawyer, who does this all the time, is just like, no matter how much research I do, is just going to have a way better idea of which location to do this based on what our goals are. So
Absolutely.
I went with a specialist opinion.
You'll be happy.
Wonderful. Good to know. That's a good thing. Clayton, do you have any thoughts or comments on the fund's locations, or any of the comments that were recently made?
Not so much a comment on the locations or anything, just like everyone said, they set them up in different places for different purposes. And everybody has a different goal. Some are, very narrowly some of the businesses are very narrowly tailored, and some of them are wider. And the wider you go, the more complex you need to be, and more like there's a higher likelihood of involving more jurisdictions. Like Sam said, the Type 3 is doing a lot of different things, so there's a lot of moving parts that are in different places, and it has to be that way. Otherwise, it can't properly get done. But one of the things that a lot of people overlook, when you work with a corporate attorney who sets these structures up for you, they often don't think about the other side, which is protecting the founders. And that's something that should be considered when setting up the entities, is not only protecting the business, but also protecting the interest of those who run the business. But then the founders need to find a way to not only protect themselves and everything that they've made in their lives up to this point, but also their families, and, potentially setting something up to leave a legacy for the future. Because nobody wants to do this forever, but when we're done, you also want something that you're going to be able to live off of, for the rest of your life. And if you don't have something that's set up just as ironclad as your business for yourself, a lot of times you run into roadblocks, or you get sued, or something like that, and it could all go away in an instant. So that's something that I think about a lot. And I've had several conversations with a lot of people on this call about that very thing. So I think it's something everybody could agree to.
Thank you for those comments. I have a couple more topics that I would like to cover. I would like to know what your guys' thoughts are on family offices, and, how do you get more family offices to invest in Web3, and why should family offices invest in Web3? Let's go on up to Sam and have him start with, yeah. Sam, you have your own family office, so I'd like to know.
Yeah, I mean, I've worked with family office for a long time, more than a decade, because outside of Web3 and in Web3, and that's what we do pretty much on a daily now as well, trying to bring them in. And I'm talking about family offices that haven't really dipped their toes into Web3, but they're curious about coming into Web3. And this is from all over the world: Asia, Europe, USA, you name it, North America, South America, Central America, etc. I think I'm going to make this very short because obviously we have a whole pitch that we go through with them, but there's a couple of reasons I think that are very, very important on why they need to get in on digital assets, is what we call it here, because Web3 can seem a little not so formal, but obviously there's high growth potential here, right? This is the next generation of technology. And anyone who wants to invest in technology, I personally feel, should look at digital assets. And this discussion got a lot easier, of course, since BlackRock came in, Citadel came in, all these large funds and wealth managers and asset managers came in that they know about, that they follow. So now they're like, oh, well, we saw BlackRock, did this. And I'm like, yes. Right. A year ago, they were kind of looking at me like, digital assets, I don't know, it's crypto, it's weird, it's all kinds of preconceived notions about what Bitcoin was. And I had to kind of educate them on it's way more than that. Diversification, obviously, you need to diversify your investments. I think the question was if you invest in a fund or a fund manager that invests in Web3 as well, you're getting access to expertise. You're getting access to people who live in this world and who know what they're doing, right? High returns is possible. Obviously, that's not really what we're chasing, I guess, as fund managers. Well, we chase high returns, but not at the cost of having too much crazy risk. In some of these projects, there's a high potential for some social impact as well, which I think is very important if that's what you want. But I really think that just aligning with future trends, I think we're moving to an inevitable world of Web3 or digital assets, whatever you want to call it. And you need to be on the train. My pitch with, the train is rolling, how to get on it or get rolled on. It just is what it is. So that's why I think they should come in and dip their toes in digital assets.
Thank you for that. Do we have any other comments on that topic?
Yeah, I'll just say that I fully agree. VC really, it's a service industry, right? Like family offices tend to have diversified portfolios. So, like Sam said, what they really need are people who are on the front line, boots on the ground. They need specialists that can help, not only provide deal flow, but also, help due diligence deals and, help navigate the investment landscape of an area where they might not have specialized investors. Like I've met some funds, for example, that have like a 20% allocation to crypto. And the partner that is looking at crypto is also looking at like AI and biotech and like other verticals. They're not going to be nearly as good of a crypto investor as a crypto specific VC.
Thank you. Okay, really quick, I'd like to just take a quick moment. Is there anyone that has to absolutely hop off right at 1 o'clock or right at the top of the hour? I would like to take a few minutes. Jeff, was that you? Did you raise your hand? No?
No.
Okay, I'd like to take just a few minutes to talk about the funds that you guys are currently raising for and find out more about those. Who would like to start with that?
I can start, I guess.
Great.
So our first fund was early stage. So sometimes even first check-in. We were first check-in to Puffer. Don't know if any of you have heard of Puffer, but it's liquid restaking for Ethereum. Just had Binance and Franklin Templeton and Revan Howard, a ton of big investors join. But we were the very first check. And so with the Lugonodes partnership that I mentioned, we still want to do early stage, but we realized that crypto VC is getting more and more competitive. There are a lot of crypto VCs, and we felt that we had to stay relevant, I guess. Capital is hard to come by, and so we've always added value, and we wanted to add more value. So there's the technical value add from Lugonodes, but also the access to deals. So with Luganodes being one of the top validators, they are actively participating at a very early stage. If you look historically, the layer 1 and the layer 2 networks have been like they've had the most upside. The FAT protocol thesis that I think Jack or Sam mentioned, that definitely played out. And so Luganodes typically get allocations to all of the top deals. They although we have a great network and we've been early stage investors, Luganodes is like going to strap a rocket to that because they're participating very early and they're getting, validator allocations, investment allocations, all of the sort of really highly sought after and closely syndicated deals that you see announced and you're like, oh, it's the usual names, and they're all there. And you're like, I didn't even hear about it, but it's full. Luganodes seem to be able to get these allocations. So that's going to really help us. And I think that sets us apart. That's something that we sell to potential LPs, co-investment opportunities, any excess allocations will go to our LPs. And so, yeah, I guess it's a bit of an evolution, but we'll look at slightly higher valuation deals. We didn't really go above 50 million in Fund 1, really was early stage. But we've already made 3 investments from Fund 2. We managed to get into Babylon, Zirkit, and Zero Gravity Labs. And they were all at several hundred million valuation. But, very good investors, good cap tables, and all have the potential to go to several billion in valuation pretty quickly. So I think that's about it. Any questions?
Yeah, well, I know that you had you have 2 funds, right? The first one, the second one. Which one was it that you were investing in a lot of companies in India, was it?
Yeah, that was Fund 1. Yeah, okay. So we've been, like I say, we've been in the space since 2013. 2 of the founding partners, Rahul and Karthik, are sort of Indian, from India, or families from India. We have LPs like Sandeep from Polygon and Aniket Jindal, founder of Bioeconomy, one of the first employees at Binance. And when we raised Fund 1 in 2020, the Indian ecosystem was really heating up. We've worked with Polygon. We were big in the Cosmos ecosystem at the very beginning, like 2017, 2016, sort of incubating projects. Tons of Indian talent and Indian teams of developers building on Cosmos. And so we just had a great network in India, and that gave us an edge at a time where we were first-time managers. And how do we sell this? Well, who's going to trust us with their money? We managed to get money from the likes of Tim Draper through Draper University Ventures. We got Sandeep, we got Aniket, we got Swiss Financial Institution, but it really set us apart because no one had that deep access to India at the time and hadn't really worked with all the top people in India in the space. And it's quite a close-knit community that we could really, with having boots on the ground there, that set us apart. For Fund 2, India is not so much of a focus. We maintain those relationships actively and we'll certainly, look at deals in India, but it's a much more global approach for Fund 2.
Thank you for sharing. Let's go on down. Who would like to go next? Sam?
I can go next. Oh, go ahead,
Jack?
Sam.
Oh, go ahead, Jack. You want all yours?
Okay. Yeah, sure. So Perspective, it's pretty new. Like I said, we've just kicked off our fundraise, but so all the GPs from Perspective are, have been in Silicon Valley for a long time, both in Web 2 and Web 3. So both of my co-GPs were Web 2 VC, very successful Web 2 VCs before they moved into the Web 3 space. Operator led, so all of us are also former founders. And one of our co-GPs, Chris Yin, he had multiple successful exits as a founder. Then he got into angel investing with kind of his winnings from that. After he did like 100 or so angel investment checks, he decided that he wanted to take it to a more institutional level. So he was at Scale Venture Partners for a while. And then now he is also the CEO of Plume Network, which I think gives us a massive advantage in the RWA field, because obviously we can leverage their research teams for like thesis construction and kind of seeing how everything fits together, as well as access to their business development pipeline, which will grow like vastly help with RWA deal flow. But also, since we've all been VCs for a long time, I think that I was at Hashkey Capital for about 2 years, so we have very strong relationships with like all of the top VCs in the space, and I would say between honestly any two out of the three of us, we see probably every major deal relatively early on. So we have great access to deal flow there, and we also. Like I mentioned earlier, founder focused bets, because I think if you have a great founder, like when you're making an investment, you're really making an investment on the team. A great founder will adapt. So if they need to pivot their idea, they can do that as long as the founder is very strong. And I think that given all of our tenure in Silicon Valley, both as founders and investors, we have become very good at identifying what makes an excellent founder. So yeah.
Yeah, I want to just say I love
ahead.
what he said there about the founders. It's so true. So it's funny because in our fund one, our two best investments, I knew within literally 1 or 2 minutes that these guys were exceptional. And it was just pure intuition. And you back them. And even though Puffer, that wasn't even Puffer then, that was, I can't remember what they were called, but they didn't even want to build what they were building. And they just pivoted and absolutely nailed it. And it was just purely a bet on the founder because he was so smart. Yeah, I just want to second what you said. It's bang on.
Well, I love that. I love talking about partnerships and passion and founders and what makes a good founder, and the fact that you just said pivoting, it's so important. I wonder what it was that you saw initially to make you think, oh, I'm going to invest in this. Or
I think a lot of it was intelligence. Like he was a former engineer at NASA and he understood crypto extremely deeply. And yeah, he was just a highly intelligent person, and he had conviction and
passion.
yeah, just a passion. Yeah, passion. Yeah, we called him Gigabrain and said we have to back him because this guy's a genius. We just knew.
Love it.
Yeah, and the other one was actually Across the Ages, the one that Ubisoft and Square Enix followed us into. The French guy, and his pitch, he was like a magician. He got out this business card, and it was like, I may even have it here somewhere.
Was this Christoph? Just curious.
No, Christoph's a good friend of mine, but it was Sammy.
Okay, I love Chris. I don't know Sammy, but I love Christoph.
Christoph's a good friend of mine. I've known him for years. Yeah, but this is Sammy's business card, right? This is like aluminium or something, and it's like got the logo like laser engraved through it. So he whacked out this card, and that was like party trick. It was like, whoa, that's a serious business card. And then he just started to pitch us on the spot, and he was amazing. And he said that they had talent, writers and artists from Game of Thrones and Star Wars and all these big franchises. And we knew within minutes that we had to back this. It's all about the people.
That's amazing.
Oh, I love that. It's all about the people. Love it, love it. Sam.
Yes, ma'am. I think I got too deep into listening to all these guys' wisdom and what they do. What is the question?
I know, and they're insane partnerships, and it's amazing. Tell us about your fund and what you guys are planning to do.
Well, there's a couple of things. So obviously on the real world asset side of things, we are very busy looking for the buy side, right? On the sell side, there's a ton of stuff that wants to tokenize, that wants to come in. I mean, there's literally hundreds and hundreds of billions of dollars that wants to come in. Obviously on the buy side, The book is much thinner. So that's where it comes in, speaking to all the family offices and the private equity and the larger funds to kind of see if they want to be a part of this, obviously. On the hedge fund side of things, it's always raising, obviously, to increase the AUM and we are launching a new, or VC fund 2, if you want to call it that. Don't have a date yet, but it will be launched probably not Q4, but Q3 sometime. And we'll be doing a fundraise for that as well, but we have road shows set up, etc. We're going to go to our network. So that's pretty much what we're doing. And on the partner side of things, I mean, obviously, we're always interested in partnering. We're partnered up with investment banks, with large insurance companies. We've partnered up with large banks, etc. I mean, we're always open to sharing deal flow or partnering up or just discussing future great projects, etc. As long as it's with people who know what they're talking about, we're always open.
I just want to add that, like, I fully agree with fully resonate with what Sam said about, especially in the RWA space, there being so much on the sell side and the real struggles on the buy side. I mean, like, the DeFi market in and of itself is obviously has like a maximum amount of liquidity. And there's so many like governments and large businesses in things like oil, and there's like I've talked to several different like retirement funds that own premium office buildings and stuff, and they want to tokenize that to get more liquidity. And I'm always like, okay, but like who's gonna buy that, right? Who wants to buy the tokenized, I don't know, I don't need like a tokenized rent, I guess, of a non-uniform asset, where the yields are going to be pretty low. I could talk all day about RWA and how I see the future of RWA fitting together. So like, maybe on a future episode I can kind of get into the thesis there if you guys want. But or Sam, I'd love to talk with you about it actually and get your perspective. But I see a lot of TradFi people coming in who don't really understand the crypto market all that well, but they just, the idea of additional liquidity is very attractive to them. But like, I can go on, I don't know what the yields are right now, but like a month ago I looked on Drift, right, and the APY for just providing USDC, like not even a pair, just USDC, was like 40%, right? Like, why am I gonna get like your, I don't know, 6% real estate token? I mean, even in private credit, man, which is probably less risky than like a tokenized office building, in private credit, I think we're about to see protocols launched, like Credible, for example, CREDBULL, that are going to have like 10, 12, 15+% APYs, right? And then, on top of that, you'll be able to, I think we're going to see a lot of the DeFiization of RWA. So you'll be able to, take use these tokenized RWAs, use them as collateral, and use like DeFi primitives like looping and all that kind of stuff with them, which will actually make those APYs competitive with current DeFi, while having, I think, a more attractive source of underlying yield. But there's just so much that I still don't see a massive demand for on chain that there is obviously a huge supply of.
Absolutely, and I think that's again, I think we can have a long conversation here, and everybody's going to log out, so I'll make it short. But you're absolutely right. I think that's why we're focusing on the large institutions, right? When we talk to, like, we're tokenizing a project now, and there's a large multi-billion-dollar family office involved, and they're like 8% a year. That's amazing. We're in. If you talk to crypto degens, they're like, well, if it's not 600% per quarter, like, why would we do it? Well, okay, sure, because they're used to all these, loopings and staking the staked coins and staking and wrapping and doing and this. But the problem with that is, and you can do that in real world assets too. Obviously, you can tokenize something, and then you can wrap that token in an insurance, and you track that insurance, and then you track the future income of that insurance, and then blah, blah, blah. And then all of a sudden you have like loop upon loop upon loop upon loop. But what if something happens along the way, right? Now all of a sudden it's crashing. And we don't even have to think about these crazy DeFi loops or crazy RWA yield loops, because the big institutions are super happy. When we're climbing up to like 12, 13, 14, 15%, they're like, oh my God, they bring in their whole like investment board, like, holy cow, this is an amazing opportunity. That's why I think it's important to bring in traditional money, as opposed to speaking to the crypto natives who, of course, everybody's a genius in a bull market, right? They're all like, oh, we can all get massive yields. Okay, well, let's talk in 12 months and see where you're at, right? So that's the approach.
Thank you. And Jeff?
Yeah, when we launched, we wanted to be unique. As I mentioned earlier, we are a liquid token crypto hedge fund. And one of the ways we're unique, we're probably one of the only crypto hedge funds that does not own Bitcoin. We actually love it. We encourage our LPs to go buy it. It's 50% of the liquid crypto market plus. But we didn't want to charge hedge fund fees to buy something that was easily purchased through Coinbase, PayPal, and now ETFs. And we wanted to bring our value by rounding out both Ethereum and Bitcoin, which again, we encourage our LPs to buy, but go down and do the hard work where it's complex. The deep stack infrastructure, the small micro caps that are maturing, have great teams, great token utility, can pivot and become that base layer, almost like the Apple iPhone. Hopefully that becomes the base layer where all the D apps come on top of it, and they're paying, like toll road, railroad, every transaction. So one of the examples we give, it's bigger. We do own it. 80% of what we own is the small and micro. 20% is in the top 20, and one of them is Chainlink. And we think that is particularly a great example of what infrastructure is and how it brings mass adoption. They're working hard to be the financial rails. They'll move quadrillions of dollars, trillions of transactions. You pick off 1,000th of a penny of trillions of transactions, it's going to be a Merry Christmas for everybody. So anyway, it's a lot of fun. And yeah, if anybody's interested in getting the rest of the exposure to the crypto market, we're available.
Where can they reach you at?
Globe3capital.com, or we're very active on LinkedIn. It's Jeff Embry or Matt Layson. We're the managing partners, and happy to take that conversation from there.
Thank you. And Sammy, where can our audience reach you at?
Sam at type3. So that's type and then the number 3.capital. And I'm on LinkedIn and Twitter and all those platforms as well. Thank
you. James?
So you can get me on jm@arcanum.capital. We are on X, or Twitter, formerly known, just at Arcanum Capital. And I don't really have personal social media. I'm on LinkedIn, but it's like a black hole. I have too many connections and too many messages. So yeah, just email or X, really.
Wonderful, thank you.
Or Verse, maybe one day. Maybe I'll start creating content on Verse. Short videos about venture capital or something.
That would be great. Jack, where can our audience reach you?
Yeah, you can reach me at jack@pvcrypto.xyz and or on my personal Twitter, which is Jack Ratko, RATKO_.
Wonderful. Thank you. Thank you, everyone. Thank you to our guest for joining us today on the Crypto Canaverse show. Alan, would you mind closing out in prayer?
Sure. Thank you, everyone, for joining. Let's bow in prayer. Dear God, thank you so much for another week of Crypto Canaverse show, where we highlight a lot of VCs in the crypto space that's coming out to share about what projects are out there to deploy capital in, to further into this area of cryptocurrency. Thank you so much for Sammy from Type3 Capital joining us, James McGuire with Arcanum Cap, and Jackson from Perspective VC. Continue to help them guide through the different opportunities that are out there, picking the right ones to deploy capital into. And I just continue to pray for this group. We all here to learn and educate, to grow and inspire each other. Continue to bless us in all things that we do. In Jesus' name, pray. Amen.